When there's blood on the streets, it's time to get your wallet out. Welcome to this week's Money Market Update. So if we were to look in the short term, you could make a case for getting very anxious or nervous. The Dow Jones closed down Friday 2.7%, the S&P was down 3.63%, the Nasdaq was down 4.17%. The Nasdaq closed out the month of April down 13.3%, the worst 1 month decline since the global financial crisis in 2008. The S&P was down 8.8% for the month, the Dow was down 3.9%. Year to date, the Nasdaq is down 21%. So when you look in a short-term window, it's very easy to get negative and think, gee, now might be the time to be selling. But when you look longer term, 1 year ago, over the last 5 years, the Nasdaq is up 130%. If we look at 1 year ago compared to where we are right now, the Nasdaq is currently down 7.9%. The S&P is actually up for the year. So what we've got going on right now is, in my view, very, very simple. During the pandemic, we had central banks and governments stuffing money in people's back pockets, forcing asset valuations higher, free money was everywhere, 0% interest rates, and you get an overstretched asset valuation in virtually everything, including the share market. But because it's an auction-driven market, it gets stretched to an overvaluation level. And when things change, you get that snap back. And when you get that snap back, what tends to happen is share markets overstretch to the upside and they overstretch to the downside. And what we're simply seeing right now is a market that is starting to get overstretched to the downside. I don't know exactly how overstretched it's going to get, but it's certainly starting to get weak. Those that are essentially, I say this with respect, weak more so with respect to their experience and their understanding, are selling and exiting. And as I said at the start of this week's episode, when there is blood on the streets, you've got to get your wallet out and you've got to start buying. Because I can tell you now, 2022 is going to be one of those years that you're going to look back on in 3, 4, 5 years from now. And if you didn't do any buying, you're going to wish you did. So if you're invested right now and you're thinking, well, what the heck should I do? If you own good quality businesses and you don't have money to invest and you don't have money to put to work in the coming months ahead, then you're just going to have to be patient. You're going to have to sit and you're going to have to ride this out. But those of you that have got money, you should be putting that to work in the next few months, in my opinion. But you should be focusing on great quality businesses that you intend to own for many years, and you're looking to those businesses to say, what are they likely going to be earning into the future? Because I want to pick up some of these businesses when they're trading at a discount now, because the probability is they're going to be continuing to rise in value and earn more money into the future. And those of you, my clients, you know exactly those types of businesses. And this weekend is going to be really interesting, because this weekend is the first weekend for 2 years since the Berkshire Hathaway annual meeting in Omaha, Nebraska. So there'll be a lot of capitalists, Woodstock for capitalists again this weekend in Omaha. Now, Warren Buffett is going to chair that meeting with his co-chairman of Berkshire Hathaway, Charlie Munger, who is 98 now. Buffett is 92. What Buffett is going to do is going to give those folks that are there and those people that are watching, if you want to watch it, you can actually watch it live stream on cnbc.com. He's going to give them reassurance about what is going on with respect to the backdrop and the fundamentals behind the global economy, and the fact that human economic output is not going to change in the next 5, 10, 15, 20 years, even the next 100 years. It's still going to advance. But what you've got to ensure that you understand is that provided you focus on every aspect of a great quality business, from the CEO to the balance sheet to the economic moat to the key principles of circle of competence, all of those Buffett formula foundations, provided you focus on those, all throughout your life you're going to see dips in share prices. 5%, 10%, 15%, and very occasionally 20, 25, 30%, and very rarely more than that. And those investors that earn the most money over time are those investors to looking at those opportunities to pick up shares in those companies when they're trading at discount and then sitting on their ass for the next 3, 5, 10 years. That's the way Buffett has built his fortune. And everyone these days wants to get in and get out. As I said last week, the average person holds shares for 3 months. But when you look at the richest investors in the world, they own shares for years and decades, not even months or weeks or days. So going forward, guys, here's the lesson from today's money market update. When there is blood on the streets and you've got some cash, get your wallet out.